today I'm going to talk about value proposition in the fintech or the payments industry. So how to define value or how to provide value to customers who are increasingly adopting digital payments in their lives. So whenever we talk about value proposition in the fintech industry, people mainly focus on two things. So one is simplicity and the other is ease of use of the payments platform. Now just look at two different examples. So both companies are players in the same fintech industry. So one company is called as N26. You can see the logo. It's a bit small in the picture, but you can see the logo on the top left, this N26. And then the other is Barclays. Okay. Now just see, both of them are very similar players, but just see how they communicate their value. Now if you take Barclays, for example, their ad or that banner is a very conventional banner, right? So they have this picture of the family and they talk about spring offers and so on. Okay, and this is how Barclays communicates its value proposition. So this is what we call as the conventional value proposition offered by players in the financial services industry. But when we nowadays, we over the past few weeks we've been discussing about the growth of digital payments, how people are moving towards cashless economy and so on, right? So as the industry is undergoing a kind of a transition, you can just observe how that value proposition is also changing. Okay, so the example for that is this company N26. You can see their advertisement banner. They're saying one account to rule them all. You will never have to visit a bank again. And they have this ready button in the home page itself, which you can click and then open the account. And they also say that it takes only 8 minutes for you to process, for them to process your details and open the bank account. And you can just see the picture over here as well. So they have put pictures of a mobile phone with the interface of their app, and it shows features like you can transfer money to your friends, you can view your account details, you can apply for other products such as loans and credit cards and so on. So this is how, as the industry is undergoing a transition, the way companies communicate their value proposition is also changing. And you can just contrast that with a conventional player versus a player who is playing in the digital economy. Any other observations which anyone likes to make on this slide, apart from what I have mentioned? Okay, let me move on. So one key thing about the value proposition is how do you define that value proposition, or how do you define what you want to provide your customers? So that value proposition should be clear, personalized, and repeatable. So a classic example of this is this payments processing company called Stripe. We have discussed about this company before, and this is how they communicate their value proposition. So price, accessibility, and convenience. So what does price mean? So price is basically when they make, let's say for example, cross-border payments, right? So the customer is charged some percentage of the transaction fee to process that cross-border transaction, and according to them, they provide better prices than their competitors. And then accessibility is basically having a mobile app, having a very user-friendly interface and so on. And convenience is basically your ease of use. How easily are you able to use the app to make those payments as often as you wish, or at whenever you want to, whomever you want to. How easily are you able to add the beneficiaries' contact details and make the payments to them? So all of these fall under convenience. So their value proposition is communicated through these three words: price, accessibility, and convenience. And one other point on how this thinking is changing, you see the conventional players, just the banks and the other traditional financial services companies, their thinking or their value proposition is focused on this payment rails and the backend infrastructure. See, so the way they communicate is basically, if you bank with us, then you can have a credit card, you can have a debit card, you can do a direct account transfer and so on. So So all of these are what we call as the payment rails, and their communication is focused on these aspects. Okay, but fintech firms, if you see, they focus more on front end and user experience. So that's what we saw in the previous slide, right? So even the way they have designed their ad talks entirely about their user experience. You open the bank account directly. It only takes 8 minutes to open the account, and the banner highlights the features of the product and so on. So they have a clear focus on the front end and user experience, which is a very huge shift from the way payment companies have been thinking about marketing until now. And now the focus is also on faster payments, less friction, deeper relationship with clients, and security. Security is very, very important because as opposed to conventional banks, everything is stored online, right, when you're making digital payments, and customers are very concerned about security. And of course, there are a lot of protocols and standards that are coming into place now, but still a lot of companies take pains to communicate the security aspect of their services. And one of the biggest challenges here for players in today's fintech industry is that it is very, very difficult to distinguish your company from your competitor's company and communicate that value proposition to customers. Okay, and so that is why there is a higher focus on this faster payments and this price. So these 2 points are very important points on which companies compete on today. And of course, there is this less friction, smoother user experience, and so on. And another value add that fintech companies offer today is insight into business health via data analytics. Now, this is relevant not in a B2C context, but in a B2B context. So when companies within or among themselves, when they use these fintech platforms, then these fintech platforms provide these companies services regarding analysis of their data, dashboards on their payments, and so on, which will give them better insight into how their business is performing financially, what kind of payments are they making, where are they spending their money, where can they find more opportunities for savings, and so on. And then this new concept is also coming into play, wherein the fintech platform offers what is called as unified payments. So this unified payments is nothing but an integration of invoicing services, accounts payable, online banking, and other activities. So one single platform where the company can take care of all of its financial needs seamlessly. So these are all certain points which fintech players are focusing on today to communicate their value to their customers. Any questions here? Okay, let me move on to the next slide. Now, like I was saying, the challenge now is financial services offerings are getting more and more commoditized, and the ability to differentiate on core products or pricing is limited. So what does this mean? See, you take all of the fintech apps, Paytm or Google Pay or Phone Pay or whatever. In fact, we were discussing this point last week as well. We start using one app, and it is not likely that we are going to migrate to another app or anything like that. By some chance we start using one app, and we will continue to use that, primarily because we don't find any significant difference in the features or the services offered by one app and the other. So for example, you can do a comparison between Google Pay and Phone Pay, nothing much is going to be changed, right? There is not much differentiation. So that is what they say, that is what they mean when they say that it is getting more and more commoditized, and the ability to differentiate on core products or pricing is limited. So that is where companies are trying to move from product positioning to needs servicing. Okay, and this is where the whole concept of value-added services, providing value-added services, becomes relevant. Okay, and one argument that experts make is that they embed financial offerings in the daily needs of customers and offer cross-industry value proposition. Okay, so what does this mean? So you see this picture over here. So there is a category of apps called as super apps, and these super apps include not just payments but also other additional value-added services like social networking, calling, online banking, chatting, shopping, food delivery, payment, and in fact calling a cab as well. So one example here is WeChat in China, which offers social networking capabilities to its customers. So you can use the use the app for making payments as well as for the WhatsApp kind of chatting or social networking. And also there is one more app in the US called Venmo, which is owned by PayPal, which offers so for example, if you gift some amount of money to someone as your friend or to your friend or a relative on their birthday or something like that, then once they receive the payment, they can put a post kind of thing on social media and share it to the others saying that you have gifted them something and so on. So this is what we mean when we say value-added services. So these are all services apart from the core products and services, right? So the core products and services is nothing but the payments capability that the app or the platform offers. But apart from that, they include all these additional things like the social networking, chatting, food delivery, and so on, so that customers are compelled to use that app in so many instances throughout their everyday life. So the same app, they can use it for so many different purposes throughout their day, and this will increase the frequency of usage of the app, and this will drive customer engagement. Now the reason they are doing this is that they are not able to differentiate from their competitors on the core products, and this is what they believe will give them an edge over their competitors. Any questions until now? Okay, we move on to the next slide. So, there is this article in Harvard Business Review, which came in 2014, and they have mentioned that depending on the industry, it is 5 to 25 times cheaper to retain the existing customer than to acquire a new customer. Okay? And this is why, in the previous slide, we talked about driving in usage, frequency, and engagement, right? So this is because a customer who comes to your platform today, we don't want them to churn or start using another platform simply because they offer more value-added services, right? So that is why, and since it's a lot more expensive to acquire new customers than to retain existing customers, it is the customer engagement becomes very, very important. And certain other ways of engaging customers and ensuring that they do not churn is to have this kind of a loyalty / rewards model that rewards customers for paying digitally. And we have discussed this point as well before, where these payment or fintech apps are sort of gamifying the user experience and saying that the more you transact with us, the more you stand to save, they have these scratch cards and similar constructs which will make customers to transact with their platform a lot more than with their competitors' platforms. So this model has already been tried and tested in the credit or debit card space to attract new users, drive referrals, and retain existing users. And apart from all this, certain other value-added services that fintech platforms are offering today is the financial management tools. So this will help customers see, plan, and monitor their spends. Now, this is also relevant in a B2C context where if you offer people the ability to that visibility into their spend, how much they're spending on what, right? So they will be able to manage their expenditure better, and that could be one of the reasons they would continue to use the app on a regular basis. And then the financial services or the fintech companies can use that data to do credit scoring and offer loan or credit products to customers, because the way traditionally credit scoring has been done, the credit scoring companies typically use the banking data and everything, and then they come up with some kind of a credit score, and based on that they offer loans, right? And then there is a lot of argument in the industry saying this conventional way of credit scoring is not working, and it's no longer the right way to go because it doesn't accurately analyze or mine the customer transactions. But here these fintech apps have more visibility into customers' day-to-day financial or spending behavior, and they're able to leverage this data and make a more accurate estimate of their credit score, and thereby they will be able to offer more customized loan or credit products to their customers. Any questions until now? me move on to the next slide. So we have been talking about value proposition and how to differentiate one particular company from their competitors, and how to provide value-added services as part of a platform to engage customers, right? And a natural extension of this is, okay, you're doing all this, and then how do you focus on growth? So how does the company grow? Okay, you see the life cycle of a typical fintech company. They divide this into 4 stages. So the first one is the validation and the startup stage. Then you have the scale-up stage. Then you have the maturity stage, and then there is the turnaround stage. Now, this valuation and startup stage is where the companies initially start up, and then they focus on the venture capital funding and so on. Okay, and then using or leveraging that funding, they enter new markets, and then they hire more people. They expand their team. They expand the locations in which they provide their services and so on. And then doing this, they attain a level of maturity in the market where they will be facing serious competition in the market, and then their business will also be a low margin business. So that's where this entire pricing and everything comes into play, right? So pricing is one of the key differentiators of the payments fintech industry today, and everybody is competitively pricing their services, and thereby we have low margins. So how do you navigate all those pitfalls? So that is what is involved in the maturity stage. And then there's the turnaround stage. This is a stage where the focus is more on survival and transition to new business models. So this is where all those points that we discussed, the provision of the value-added services, differentiating yourself apart from your core product or service offering, all those things comes into play in the turnaround stage. And this is especially very, very relevant in today's digital economy. And in this turnaround stage, the focus is also heavily on embedded finance and banking as a service. Now, this banking as a service is what we see today when we are making an e-commerce transaction. You have that option to choose to pay via some kind of a credit financing, or you can choose to pay via an EMI, right? So this is what we call as a banking as a service. And a lot of the fintech companies today, what they're doing is they are partnering with other platforms to offer, so that those platforms offer the services of that financial services company. So Amazon partnering with Bajaj Alliance Finance, the purchase of your mobile phone, something like that. So this is what we call as a banking as service. This is also part of the affordability construct that we talked about. We talked about buy now, pay later last week, right? So this is also something very similar to that. And what companies are doing?
Sai, just on that embedded finance, can you clarify what you meant by embedded finance?
Yeah. So
buy now, pay later, is that embedded finance, or yeah, please.
Yeah. So it depends on how it is offered, Chaitanya. So for example, embedded finance and this banking as a service. So this example of the Amazon and Bajaj Alliance that I gave just now, right? So the offering or that service provided by Bajaj Alliance or any credit company will be embedded as part of the user experience in Amazon.
Right? In Amazon, got it. Understand. Sorry, I missed that. Okay.
So the reason that they do this is they want the customer to have a seamless experience when they're purchasing a product. So for example, when we are ordering something from Amazon, the customer is not redirected to the Bajaj Alliance site and then made to take up some policy over there and do it. So in the single Amazon user for itself, they can do that. They can avail that credit and purchase the product.
So, for example, either Paytm or sort of PhonePe or whatever. So it will be embedded in, let's say, something like an Amazon, and you can sort of take credit right there in the process flow, just like when you sort of check out, and then you pay them later, right? So that's sort of the thing. Yeah. Okay.
Move on to the next slide. So, fintech companies, what they're doing is they're aligning their growth strategy with the customer segment that they're targeting. So based on whether they're targeting individual consumers or whether they're targeting the B2B space their strategy differs accordingly. So when it comes to individual consumers, they are targeting customers with certain themes. So for example, insurance. Okay, and the way they market their products is they target self-employed people and freelancers as well, in addition to the conventional or the run-of-the-mill customer, because today's economy is changing a lot. Initially, in previous generations and so on, especially in India, if you see, most of the people, if you see, they used to work with the public sector. And then there is this transition when people started moving from the public sector, and a large chunk of people today are occupied with the private sector. But then that is also transitioning to a phase what we call as the gig economy, right? So this is what we call as the self-employed people or the freelancers, or for example, all those people who drive the Ola or the Uber, who work with Swiggy or Zomato. So this is a kind of a different employment, right? This is not your conventional type of employment. And a lot of fintech companies are targeting or launching marketing campaigns which are focusing on the people who are working in the non-conventional type of way, the self-employed and the freelancers people, because as the years go by, these people are forming a major proportion of the population today. And this is why these fintech companies feel that this is an untapped market, and they target their offerings of insurance and credit facilities and other products and services accordingly. And then the lending space is also very crowded, in the same manner as in the B2B space, and there's a lot of possibilities for acquisitions and consolidation. Now this is more of a high-level point where people who are investing in these companies and people who are following the market, so they feel that there is a possibility where some of the bigger companies acquire smaller companies, and then the industry itself gets consolidated in the years coming up. And the last point is focusing on the high net worth individuals, or the affluent segment of the market, where for this particular segment, the focus is on providing wealth management and investment services, leveraging artificial intelligence. So this is where the blockchain and the cryptocurrency and everything comes in. There's a lot of people say that anyone can invest in cryptocurrency today, but it is a very, very expensive prospect. You can just see the conversion rates of Bitcoin and Indian rupee and so on, and you'll know what I'm talking about. But this is more relevant, I would say, for the affluent segment of the market, where the focus for fintech companies is in these two areas: the wealth management and investment, leveraging artificial intelligence capabilities. Any questions until now?
Just a quick thing. I think some of if you look at point number 3 here, right, target self-employed and freelancers and so on and so forth, right? So basically, one of the big problems, if you look at our country, about, I think, I don't know the numbers, but I think less than about 5% of the population is into the traditional jobs kind of a thing, right? So, I mean, at least the what people call
organized sector,
right? But the rest of all are in their own work, or maybe unorganized sector as well, as in, the payment happens through, it's not an employment as such, right? So for example, a maid who comes to your house, for example, she's not in organized sector, right? So one of the problems that they face is financing, right? So for example, I'm sure, almost every one of us knows, right, if you go to a, fruit vendor, right, and many other vendors like that, what they do is they take a loan, right? Something like, let's say if they want to take a loan of 100 rupees, okay, the amount will be very small, right? Or maybe now, right now, it might be like 500 rupees or something like that. So the person who gives the loan, the person probably gives, let's say, 450 rupees, okay? And in the evening, he or she would collect 500 rupees by the end of the day, right? So some, markup they would. So the number of the amount of the amount that is being lent is very small, and the margin, or put differently, the interest rate is very high, right? So 250 rupees on 450 rupees for one day. It will amount to some, really huge number, right? In terms of percentage. Now, so the problem that they face is typically if they go to bank, they ask you, what can you pawn, right? So what is the security, right? So, and if you look at, I think if anyone who tried to borrow money except for your education loan, if you're in a good institute, they won't ask you any question. They'll just give you the loan, right? But otherwise, if you try asking for a loan for yourself, the number of questions that they ask you, and without security, they won't give you anything, right? If you are employed, the payslip becomes the security in a way, and of course you have to give them the, a letter saying that you can auto debit my account and so on and so forth, right? So the difference that I'm talking about is that while the traditional banking is focused on security, right? So companies which are in payment industry, because payment happens on their platform, they can see the flow of funds that come to that account, and they can potentially treat that flow as a security. Okay, which is a very different way of looking at it than traditional banking, right? So banks, they don't care, they want security, which is an asset, right? Most of the all these people, they lack assets. So that's the reason why, they take a loan in the morning and sort of give it back in the evening, that kind of thing they do, right? So which is a different way, and it is now possible with these platforms and is otherwise not possible, right? With banks also it's possible, but with banks, they don't actually transact through the banking system, right? So that hasn't happened. So now all the Jan Dhan accounts have come into picture, which is, almost everybody has a bank account now. Even now we see once in a while people who don't have a bank account, right? But otherwise, it's not possible. But this is the new thing that is happening, and that's why you have these, I think, Money Tap, Loan Tap, something. All those companies have come based on this.
Yeah. That's true, Chaitanya. In fact, the first stage that experts say is inclusion, right? So they need to include these people into that digital payments ecosystem, and that will give them an insight into the funding flow that you mentioned, right? And so that based on that funding flow, they will be able to assess whether that particular person is creditworthy, even when there's a lack of the collateral or the security. And thereby they will be able to extend that credit to these customers as well.
See, on that note, let me just add one more thing, which is, I think, is a very, very smart thing that our government did, right? Which is they opened, so earlier it used to be like a trap, right? The trap is that, see, we want to transfer money. So you remember that infamous quote where somebody said, so the government sends 100 rupees, right? Or if government sends 1 rupee, then only less than 5% actually reaches our people, citizens. Okay, that was the quote. But today, what's happening? Actually, what the government did, the really smart thing that they did was, so banks would always say, okay, have a minimum balance, right? Are you creditworthy? What if I open the bank account for you? How much are you going to save in my bank account, right? So this was the main thing, right? Because they wanted funds. If you get funds, then they'll be able to use funds somewhere else, which is they loan the money to somebody else, and they have a margin. So that's the whole banking business model, right? So while the government, so what the government said was, I think it was a very, very smart thing that they did, which is that they said, forget everything, just open the bank accounts, right? You have Aadhaar, so the whole thing about not having the ID card, etc., that's also gone. You just open the bank account. So they opened like crores of accounts. And what government started doing is government started sending the money directly to them, right? So now there is no more issue that say you cannot keep money there. So they have money. Government is sending them money, right? So during pandemic also you would have seen, right? I don't know if you have heard, many people, especially the below poverty line people, they have all gotten money from government, right? And a lot of many of the transfers that are supposed to happen are now happening directly through either our regular accounts or Jan Dhan accounts that the government has opened, right? Forcefully. The commercial bank did not intend to do that. government has forced them, and it has become one of the fantastic mechanisms through which money can flow, and all the middlemen got cut because of that, right? So money is directly flowing, and it's having a fantastic effect on all the the real people of the country. Go ahead, Sai.
So talking about the strategy for growth in the B2B customer segment, again here it is the market is further divided into two. So first is the enterprise market, dealing with the larger companies, and then you have the small and medium businesses, companies which have like 100 employees or fewer than that. For the enterprise market, the fintech companies are focusing on streamlining their business services and core business processes. How do they enable bulk payments at a faster rate and at competitive prices, right? So that is the first point. And then wealth management and capital markets. So there could be a lot of investment-oriented companies, right? So capital market is basically refers to the stock market, the bond market, and so on. And then the application of artificial intelligence and related infrastructure. So big data, processing that big data, and so on. So this is the focus for fintech companies for enterprise customers. For small and medium businesses, it is more on accounting and invoice automation, benefits and business banking services, and then credit lending. So based on the market, they have just segregated that market based on the size of the companies, and then for each class of companies, they have accordingly tailored. They're accordingly tailoring their strategies. Any questions? All right. So that's what I had for the day.